The silver market is experiencing unprecedented volatility today, with prices experiencing sharp corrections after touching near record highs. As of this morning, spot silver dropped to around $76 per ounce, pulling back from the all-time peak it reached just days ago. This dramatic movement comes as China's new export restrictions officially take effect, fundamentally reshaping global supply dynamics and pushing the narrative of triple-digit silver prices from speculation to serious possibility. Silver's performance over the past year has been nothing short of extraordinary. Starting at just $28.92 per ounce on January 1, 2025, the metal surged to $81.27 per ounce this week, representing an astonishing increase of approximately 180% in a single year. The metal reached its all-time high of $79.284 per ounce on December 26, 2025, before experiencing today's sharp sell-off. On January 8th, Indian markets saw particularly severe pressure. MCX silver prices plunged by as much as Rs 11,000 per kilogram to hit an intraday low of Rs 246.05, with the volatility reflecting both profit-taking after the historic rally and global market jitters. Earlier in the session, prices had reached a record high before the reversal, demonstrating the extreme swings characterizing the current market. This correction, however, may be less about fundamental weakness and more about technical factors. Market participants attribute the pullback to profit-taking following weeks of relentless gains, combined with a strengthening dollar and mixed economic signals affecting Federal Reserve policy expectations. The catalyst transforming silver's long-term outlook arrived on January 1, 2026, when China's Ministry of Commerce implemented a 2-year special government license requirement for silver exports, along with tungsten and antimony. This policy replaces a quota system that had been in place since 2000, representing a fundamental shift in China's approach to strategic resource management. The new requirements are stringent. Exporters must prove they executed silver exports annually from 2022 to 2024. While new applicants must demonstrate annual production exceeding 80 tons and consistent export records. These barriers effectively exclude hundreds of smaller and mid-sized exporters who have traditionally served global markets. The timing is critical. China controls an estimated 60–70% of the world's refined silver supply, making these restrictions capable of triggering immediate global supply shocks. The strategic intent is clear. Beijing is prioritizing domestic industrial needs, particularly in high-growth sectors like solar panels, electric vehicles, and advanced electronics, where silver's unique properties are irreplaceable. Even Elon Musk weighed in on the implications. Musk stated on X, "This is not good. Silver is needed in many industrial processes," highlighting concerns about potential disruptions to technology and manufacturing supply chains worldwide. The China export restrictions are landing on a market already experiencing severe structural imbalances. For the past 5 consecutive years, global demand has exceeded total supply, creating a structural deficit that has quietly eroded inventories across the world. The numbers are stark. Global silver demand reached approximately 1.24 billion ounces in 2025, while total supply, including both mine production and recycling, came to only about 1.01 billion ounces, creating a deficit exceeding 230 million ounces. This isn't a problem that can be easily solved through price incentives. Silver mining is largely a byproduct of other metal production, primarily copper, zinc, and lead, meaning even if silver prices double, miners cannot easily increase supply. The development timeline for new mining projects stretches 8 to 12 years, and global ore grades continue to decline, making supply responses painfully slow even as demand accelerates. Industrial applications are driving much of this demand growth. Photovoltaic solar manufacturing alone accounts for approximately 20% of global silver consumption. The renewable energy transition, combined with expanding electric vehicle production and the semiconductor industry's insatiable appetite for silver's superior conductivity, creates demand profiles that are largely price inelastic in the short term. What seemed like ambitious speculation just months ago is now being discussed as increasingly probable by mainstream analysts. Many analysts are predicting silver could reach $100 or higher in 2026, with some technical analysts painting scenarios of even more dramatic price structures emerging. The case for triple-digit silver rests on several converging factors. First, the physical supply-demand imbalance shows no signs of resolution, with China's export controls likely to worsen existing deficits by thousands of metric tons annually. Second, industrial demand continues its structural growth trajectory, driven by technologies central to the global energy transition. Third, investment demand is awakening to silver's unique position as both a precious metal safe haven and an industrial commodity in shortage. Perhaps most significantly, refining bottlenecks are emerging even in Western markets. Reports indicate major U.S. refiners are turning away high-purity silver, not because of quality issues, but simply due to lack of processing capacity. This suggests the tightness extends beyond raw material availability to the entire supply chain infrastructure. Today's sharp corrections serve as a reminder that silver's path to potentially higher price levels won't be smooth. The market remains susceptible to profit-taking, dollar strength, and shifting macroeconomic conditions. Trading volumes have exploded, bringing with them increased volatility as both speculators and industrial users scramble to secure positions. For investors, this environment presents both opportunity and risk. The fundamental case for higher silver prices appears increasingly solid, supported by physical scarcity rather than mere speculation. However, the journey will likely feature dramatic swings like today's sell-off, testing the resolve of market participants. What's clear is that silver has entered a new paradigm. The combination of China's strategic resource nationalism, persistent supply deficits, and accelerating industrial demand has created conditions unlike any seen in decades. Whether silver reaches $100 per ounce in 2026 remains to be seen. But the factors that once made such a target seem far-fetched are now firmly in place, reshaping the narrative from if to when in the minds of many market observers. As markets digest today's volatility and assess the full implications of China's export controls, one thing is certain: the silver story is far from over, and the next chapter promises to be just as dramatic as the historic rally that brought the metal to these unprecedented levels.